Hi, welcome to this video day, 7th of December. It is Thursday. What we're going to be doing today is looking at active trade management. Now, in terms of this, I want to use one of the trades I put on yesterday. It's in a video before this one on our channel, if you haven't seen it. And the setup I'm going to look at is USD CAD. I also did CAD JPY in yesterday's video as well. Thought the CAD would weaken. It's going down quite nicely, particularly on the USD. USD is up about 130 pips on the CAD. So we have a decent profit, okay? We don't want to lose it, but we think there's far more to come. So you've got to actively manage the trade. I think, managing your open trades is just so important. A lot of traders actually just put trades on, put the entry in, stop, target, and just see if it works out. I don't think that's a good idea. And then at the opposite end, you've got traders, when they get their trade on, they want to be too active in their management and they react impulsively to market action or the price, okay? So just want to go through my rules, same for every pair that I do, and also discuss a question I was asked in relation to yesterday's video in terms of how I executed the trade as well. Right, let's go and look at the chart of USD CAD. On the chart of USD CAD, it's 8:30 p.m. GMT. I'm just going to do my update for the member center, the PM update, and see if we need to make any changes. In this pair, I am going to make a change and just list out my 5 trade management points on the left. Now, before I talk about them and draw some levels on the chart, just want to make a point about trade entry. A lot of people ask me, why don't you just wait until the Bank of Canada come out and give their statement and their decision and then do your entry? Why do it before? I just find it better to do it before because, I've decided what they're going to do or what I think they're going to do. I've looked at the sentiment, I've looked at the levels. I could just place my trade and the market is either going to bring me in the trade or I'll miss it, okay? And I'm always in favour of just looking at the big picture and just looking at a static chart, okay? There's nothing moving here, okay? I think once you see prices move, your emotions get involved. Now, in terms of live trading, there's a big thing about this on the net. Come into this trading room, trade live with us. Very often, they're looking to go both ways. I think that's a huge mistake. How can you have a big conviction about the trade? Okay, all you want to do is just respond to the short-term price action. A lot of people like doing this, make 30, 50 pips, and they think that's a result. It's not a result. It's not going to make you money longer term. And I think there's this thing in Forex trading where traders want excitement. If you want excitement, Forex trading, I don't think it's the right business to be in. And as soon as you're in front of a screen responding to price action, you're just getting caught up in the noise and your emotions will immediately get involved in your trading. It's just natural. So I think, set your levels. That's it. The market is either going to put you in or not. And, that's it. You can just review what happened later on. Now, in terms of trade management, let's look at point number 1. Is the original premise of the trade still good? Well, let's look at what we did. We came in through that level, 127.30, and we moved up. So the original premise is still good. Price action is supporting us. Nice blue candle through the 20 and finishing near the high tonight. It's still supporting us. We're trading right at the high, okay? So always do that. And you might be thinking, well, that should be a fairly logical thing to do. Most traders don't stop and think about it. Beginners in particular, what they'll do is they'll see it break up here and it finishes near the high, and they'll see they got like 80 pips profit. They want to grab it, and we know this. We've discussed this in recent videos that all traders have the overriding desire to avoid a loss. Okay, they don't want a profit to turn into a loss. Okay, so that's why trades get snatched. You've got to avoid it. This trade could still go negative for us, okay, despite the fact it's up about 130 odd pips. Okay, You mustn't snatch the profits too soon. If the premise is good, you hold, okay? Now, what we can do tonight, though, is move the stop. And, I'm putting here second level support and stop. I'll just explain what that means. Okay, so yesterday when we came in, we noted, okay, that this was the key support level. Double top, big blue, break, back, and then bounce from it, okay? So our stop needs to be tucked back well from that candle tail. The round number, so put it 125.60, okay, giving it a little bit of room. We can move it now, in my view. So what I want to do, as far as I'm concerned now, we could put our stop behind that level, okay? Why? Because you've effectively got two levels of support, haven't you? You've got basically the 20-day moving average. Then you've got these three bodies here. That's a stop back behind. You don't want to be too close. I've always said this because, if you're too close, you just get knocked out the trade, okay? Now, in terms of point number 3 is a partial bank warranted. For me, it's 130 pips. I'll consider it tomorrow morning because we've got non-farm payroll coming up. Normally on a partial bank, I normally want above 150. Okay, so it's looking good tonight, so I'm going to leave it, but I might bank out some tomorrow. Non-farm payroll coming up, plenty of volatility could be coming. Let's say we bank out tomorrow. I expect the USD to just hover below the 129. So if we do a 50-50 bank, where are we going to put it back in? Okay, this is point number 4. Okay, so 129 is the near term resistance. Now, my view of this trade was, when we put it on, obviously we're long-term bullish on this one. But this big red candle was just an overreaction to the Bank of Canada. Obviously people getting keen that maybe the Bank of Canada, we're going to talk about, interest rates going up. We said they wouldn't. Bank of Canada confirmed that. So this candle for me should be totally retraced. Then we've got to see if we get the breakout. So if we do the 50-50 bank, we'll just drop it back in above the 129 level. I'll go 129.30. And if we do bank, we come back to this support zone here, I'd put the trade back in, hopefully at a better price, if that makes sense. So, we probably will. I'm going to do it in the morning then, because I don't think the USD is going to weaken before then, before payroll. But, taking the bank, obviously I've said this before, it's psychological, reduces your risk exposure. You might get a better price on the dip. If you don't, you get the breakout. Doesn't matter, the breakout will be high odds. We clear 129.30. We will be going up, in my view, to here. So 132, if I draw my line straight, then 135. Now, I did put trade the other trades, okay? What I might do sometimes, I wouldn't do it on this trade because it's looking really good. But if I've got a profit, and I see another trade that looks much better, I might just bank this trade out totally and go for the other trade. Okay, so going always for the best opportunities. But this is one of 5 trades I've got on at the moment. I think it looks a decent one. So we'll see what happens. But I'm pretty confident of this one. Okay, we've got the stop up a bit. I'll probably bring it up a bit more tomorrow. Obviously, there'll be the AM update and the PM update. The partial bank will probably be tomorrow. It won't be tonight for me. That is the video. I hope it all kind of made a little bit of sense. Thanks for watching me as per usual. Take care. Have a good day.